Welcome back. You're with India Market Open. All right, the company in focus this morning is PNB Housing Finance. Morgan Stanley note recently saw 40% upside on the stock. The Q3 numbers have also been fairly decent. We're trying to understand what makes this housing finance company tick and the focus that they have kept on the HFC business, paring down the corporate business, etc. Girish Kousgi, the MD and CEO at PNB Housing Finance, is joining us now for more on the story. Mr. Kousgi, very good morning. Thank you for speaking with us here at NDTV Profit. Let's start by talking about your Q3 numbers and just, as a takeoff point for our conversation. Was it a tough quarter? We've seen that in the financial space, your net interest income was down about 19% year on year. Operating profits were also, squeezed about 20%. Provisions were up. How would you look at that one quarter three? Is it an aberration, or are you seeing a climate which is slightly difficult right now?
Morning. So I think Q3 was soft because there were a lot of exceptional items. I think there were a lot of one-offs in comparison. I think if you look at PNB Housing today, we are through a transformational journey, and this is in two phases. So phase one is now over. Phase one had to do a lot with raising capital, getting the corporate book right in terms of rundown, and getting the asset quality right. On corporate, we were at about, let's say about 2 years back, we were at about 35% of NPA, and now it is less than 3%. So we have just one account. We are expecting resolution in this quarter. So corporate is more or less sorted. We ran down the book from 18,000 crores to about 2,200 crores as of last quarter end. Now, and also we did a lot of work on growth because year back, if you see the growth, it used to be negative or flattish on the retail side. First 9 months, we have progressed from 0 to about 13.5% in terms of book growth and disbursement growth of 22%. So Q3 was soft because of exceptional items. Otherwise, now we are ready for phase two. Phase two, our focus is going to be in terms of growth and margins. The reason why I'm saying growth is that in spite of all those challenges, in last 1 year, we've showed a growth of 13.5% on retail. Since corporate, we have stopped doing business temporarily. The guidance for coming year on book growth is going to be 70, and disbursement growth is going to be 24% plus. So in by this March, we will be at 300 branches. So if you see, in last 17 months, we would have opened 200 branches. Taking it to 300, that means from 100 to 300. So from coming financial year onwards, we would have 300 branches. And out of 300 branches, 200 branches will be focusing on lower end of prime and affordable business, which means these are high yield businesses. So going forward, growth and margins is the focus.
Okay, I'll come to you on details on margin and growth guidance, but just a word on your corporate book, and that's impressive, the extent to which that corporate book is run down. You're saying there's one borrower left, you're going to close that this quarter. Can you give us an idea both on timelines and the amount that you hope to recover?
No, I mentioned there's only one NPA account left.
Okay.
The book is 2,200 crores, which is down from 18,000 crores. So that one account is small account, it's about 80 odd crores. So that we are expecting resolution this quarter.
Okay, so it's not going to make a huge difference here or there. It's about 80 odd crores. And then, you've cleaned up that book completely. Talk to us about the focus as well, because your non-housing portion of your book is, relatively smaller. The focus is on the housing finance side. Is that where your focus continues, and how do you aim to grow it?
Our focus would be on both home and non-home, but both under retail. Largely, our focus will be on retail. So as we speak now, we are close to 97% on of retail book at a portfolio level, and incrementally we are doing only retail now. So our focus is going to be on retail. Within retail, we are operating in two segments now. One is prime, and the second one is affordable. We are launching a new segment from April, that is emerging markets. So out of the 300 branches, 160 branches would focus on affordable. We are seeing very good traction. we were one of the fastest to build a AUM of 1,000 crores. So we see a lot of traction there. So we will have 160 branches focusing on affordable housing. And the yields, what we are expecting for coming year is going to be about 12.5% from affordable segment. And 50 branches would be focusing on emerging markets. So here the yield should be close to about 10%. And the balance 90 branches will be focusing on prime business.
I want to understand your loan growth trajectory, Mr. Kousgi. So your loan growth in FY25 was about 15%. The following year, FY25 is expected 17%. Do you aim to bump this up? What is your outlook for your loan growth rate?
I think for next 2-3 years, we should grow the book by 17%. So this year it's going to be between 14 to 15%. I'm talking about retail since we are not doing corporate now. So on retail, the growth this year is going to be between 14 to 15%. And from coming year, for next 2 to 3 years time, we will focus to grow at 17%.
In your individual housing book, which is about 2% of your loan mix, how much of it is affordable? And I'm just trying to get a sense of, how much of it is now growing because of this entire real estate housing boom that we're seeing. Are you seeing benefits of that? And going forward, do you see benefits of that sustaining?
Oh, definitely, yes. Demand is quite robust. Real estate is doing well since last 3 to 4 years' time, and this cycle would last for another at least 5 to 6 years. So we see a lot of demand. Affordability has improved drastically. And also because we had changed our focus and we had started affordable vertical last year, and we're going to start emerging vertical in the coming year. So we see a lot of scope, especially on affordable and emerging in terms of profitability. And the prime pool also would grow. And overall, the growth is going to be about 17%.
Geographically, the lion's share continues to be from Maharashtra, and you think will continue to be from Maharashtra?
No, we are a national player, so we are operating in about 22 states. Our focus is on all the zones, south, north, and west, to a small extent in east. I think that focus would continue. However, within the segments, we may operate to be slightly skewed towards one of the zones.
That you are. I'm just wondering if it's going to continue in that trajectory, or you're working on new geographies and locations as well.
So we are getting deeper into each of these geographies. I think in terms of skewness, it will be slightly skewed towards south. Maybe 38, 39% incrementally, and the rest will be between west and north. So in terms of balance, it will be almost, all the three zones would contribute almost similar numbers.
So more focus on south. Just on your margins, I want to understand that you had a credit upgrade recently, Mr. Kousgi. Has that helped you in terms of cost of funds, and will that flow into your margins?
Oh, definitely, yes, it has helped. And we also see that the interest rates have now peaked out. And in about 2 quarters from now, the rates would start dropping. So we will also get some benefit on the cost of borrowing because of the rating upgrade. So definitely we'll see some benefit. And this apart, focus is to increase margins, and directionally, strategically, now 2/3 of our branches would be focusing on originating business at a better yield, at a higher yield. So this would definitely, maybe after 2-3 quarters time, the margin should improve.
Where is that higher yield coming from, and what would be your margin guidance? When you're saying it will improve in 2 to 3 quarters, can you give us a sense, a direction, and a ballpark number on that?
So as of now, margin is about 3.5%. So we'll be able to maintain that for next 2-3 quarters. After that, I think with every passing quarter, the margins would improve as the mix in the book keeps changing. There is no guidance on future margin, but definitely I think after 2-3 quarters, margin should improve because most of the origination would be at a higher yield.
So 2 to 3 quarters later, you see an improvement. You can't really give us a number to where you expect that to go. But thank you so much, Mr. Girish Kousgi, for taking out the time and speaking to us today. That's a wrap on the India Market Open. But up next, we are going to be seeing Talking Point. Stay tuned.